Welcome to Markets Now. I'm Michelle Rourke with Kent Beadle, Paradigm Futures, and livestock futures. We have been mixed to a little bit higher this morning, with the grain trade leaning mostly lower. Kent, thanks for being with us, and let's just talk a little bit about some of the dynamics in the grain market. Of course, we didn't see any follow-through buying yesterday in the grains after a nice pop on Friday, but some of this has to do with weather. Some of it has been a little bit of this uncertainty with what's going on in the Middle East, hasn't it?
Yeah, I think on the weather side, you have a double-edged sword, but it's like everything else in the marketplace. The funds continue to skew bearish, and we continue to trade things bearishly. We are going to have rainfall for the Corn Belt. This is another good system after the one that we had in late March, and we need rainfall. The drought monitors and the soil moisture maps all indicate that we are still on the dry side, especially in the western Corn Belt. Parts of Iowa, Nebraska, much of Minnesota needs to have moisture, and we're going to get a lot of moisture here over the next few days. Of course, the flip side to that is that planting progress was starting to kick off, and this is a weather pattern that is going to slow things down fairly dramatically, but that's really not being traded at the moment. The marketplace at this time doesn't care about planting progress as much as it cares about getting the moisture.
No doubt. Like you said, it is a double-edged sword, something to watch going forward here. The other thing we've been watching is the developments in the Middle East, with the conflict there kind of accelerating or escalating. But how is the market viewing it right now?
Well, right now, the market is looking at the Iranian attack as one that was fairly well telegraphed and was easily repelled by Israel and the U.S. and allies. And, therefore, traders don't necessarily see a great reason for any further escalation. Now, the news cycle has indicated that people within Israel are planning a retaliation, and it's just a question of, how measured is it, and whether or not it results in further escalations and more tit for tat and something that spirals out of control, or is it going to be something that ultimately is going to put this to bed? And right now, the marketplace still believes that because of the way that Iran telegraphed the attack and the way that the attack was repelled, that it's not likely to escalate into something that is very significant going further on down the road.
Okay, so that's maybe why crude oil has been setting back a little bit here then.
That's correct. And with crude oil setting back, you don't have something that would be helping the grains out in that regard either.
Right. And conversely, we've had the dollar going up. It's been getting stronger here, not only because of what's been going on with, Middle East conflict and concern, but it's really been about the economic data that's come out and concerns about inflation and maybe staying higher on interest rates for longer. So that higher dollar's been a headwind, hasn't it?
Yeah, it absolutely has. Strong interest rates has been supporting the dollar, and the dollar against the Brazilian real specifically is something that people in the bean market have been looking at recently. Now, I will tell you that Brazilian soybean premiums have still been strong despite all of that. But in general, that the strong dollar has a tendency to pull down on wheat, and just kind of as a knee jerk, it pulls down on everything else. And it's been a market factor these last couple of days for sure.
You bet. And of course, we had a little hangover from the USDA reports and the fact that there's still big discrepancies between the U.S. and South America in terms of production and crop size. When will we get that rectified? Are we still trading it, do you think?
Right now, the marketplace is trading the USDA version of things and is not trading the South American version of things. Okay. It's just that simple. One of the reasons is that the last couple of years, there's been a discrepancy between USDA data and Brazilian data, and the USDA has not moved. All right. And what they've done, in fact, is taken their knowledge of the size of Brazilian exports and use that as a reason to essentially correlate their version of the story. And but what they're not necessarily looking at is whether or not it has resulted in a lower ending stocks number. In other words, they're saying stocks are steady, but since exports are higher, production must have been higher, as opposed to saying exports were higher, so ending stocks might be lower. They're holding firm on their ending stocks and saying that production was better, and they think they might be able to do that again this year. At least that's what they believe the evidence is pointing to.
Technically, we should point out we're still within our trading ranges in most of the grain complex, right?
That is correct. And each of the last couple of weeks, we went down, tested the low end part of that range, and then we found some support later in the week. We've had 2 or 3 consecutive what I call selling exhaustion tails, where we end up closing high range on the week, leaving a tail on a candlestick chart. But once again, this week we're going to go down and test those lows of the last few weeks, and we're doing it again this morning.
Okay. So cattle had a nice pop yesterday, and we've seen, pretty firm trade here for the most part today, although two-sided at times in the feeders anyways. Do you think that we have gotten the oversold condition taken care of, or is this market at a point where it is comfortable with the HPAI news and can start moving forward?
I think it's comfortable with the HPAI news. I believe that there's been enough reasonable sort of discussion from the scientific community that is helping to alleviate worries about the consumer. There have been many scientists who have said that, look, the cattle are getting sick, the cattle are recovering, the milk from the dairy cows, if pasteurized, is perfectly safe, and all of these things are helping to put a little bit of floor and sort of ease the concern that we were trading over the last couple of weeks.
We have kind of come together a little bit with the futures versus the cash trade. We had a pretty good discount there, but that has started to come together, right?
Yeah, and of course it is April, and we're the April cattle are trying to converge, and right now we're within about $1, the cash and the futures, as the cash traded 182 last week. So where it's going to get interesting is that you now have these deferred contracts that are trading a fairly sizable discount, and you still have a situation where we have less cattle this year than we had the year before. So that's the other reason why I think it's we're finding support, because it's just not really all that likely that these deferred cattle end up getting a lot cheaper than they're trading right now.
Right, and the cash has been really orderly, I think, during this whole HPAI explosion or fear or whatever you want to call it.
Yeah, that's correct. Ultimately, the futures board reacted a lot more significantly than the cash did, and of course, one of the reasons for that was a fairly sizable, large speculative position, and you did have one negative fundamental, which is a lot of heavy cattle out there, but I think that's getting resolved, and the marketplace needs the meat.
Yeah. So the hog market looks like it's put a top in after the bearish key reversal, but do you think we're at a point where we're going to hold support here now and we're going to build on where we're at, or trade sideways, or what's the next move for this market?
Well, we had been in a kind of a sideways trading range for 3 or 4 weeks, consolidating our gains, and then we had that huge rally when we put our high in. We're right back down into that trading range again. So there's some support that's fairly close by, and if we can hold that, I think that there's a chance that we start to work our way a little bit higher again. Marketplace is going to be watching the cash very, very closely here, and at the moment, the CME index is not going up a lot. And of course, last week Some of the carcass value numbers were not all up all that much either. Market's going to need to see some escalation in cash prices, and if they see it, we'll be able to hold this area or possibly go a little bit higher. Otherwise, we might end up correcting a little bit further in the hogs.
Although you got to feel like demand has been pretty strong here. You got cutouts over $100, and we've had good exports recently. So
demand is strong, and we have this continual value discount to the beef, and obviously it still works very nicely into the consumer's mind that you're going to be able to get a good cut of pork for something substantially cheaper than it's going to cost you to get expensive beef right now.
Yeah. All right, some good comments this morning. Thanks for joining us, Kent Beadle, Paradigm Futures. Remember, futures and options have substantial risk and aren't suitable for all traders. That is Markets Now.